So you just got a rack, or maybe it's a stack. I actually had to look this up on Google to actually determine if it was actually called a stack or a rack. And while some notable people like Shannon Sharpe argue that 10K is actually called a rack, other definitions aren't so concise. Whatever you want to call it, today we have $10,000 to invest, and I'm going to give you 3 ways to invest your $10,000. Let's go. What's up guys, it's Humphrey. I'm so passionate about this topic of investing $10,000 because there are so many different ways where you can invest $10,000. Many people just don't know where their priorities should be. Now, before we move on, $10,000 is quite a lot to invest. So if you're not quite there yet, I do have some videos on how to invest $1,000, which I'll link in the description below and right here. Also, only a small percentage of people who watch my videos are actually subscribed. So if you do end up enjoying this video, consider subscribing. It's free and you can always change your mind. Okay, so in today's video, we're talking about 3 ways to invest $10,000. But in my opinion, these 3 ways are more just like 3 pillars. So the first pillar is actually your financial foundation. You need to lay down a solid financial foundation before going into pillar 2, which is deciding on your core investments, and then finally pillar number 3, which are getting into riskier and more speculative investments. I like this approach of pillars because instead of me telling you to put $10,000 on red or black in roulette, or similarly all on cryptocurrency,
I'm all in.
I'm going to be laying down a framework for how you should be approaching this problem, so no matter what your preferences are, you're going to have some sort of idea on how to invest your hard-earned money. So let's get into the first pillar, or step 1, or way number 1, whatever you want to call it, and it's actually establishing your financial foundation. With this first step, you're going to consider investing $10,000 in actually building out a financial foundation. And what that means, in my opinion at least, is to actually pay down high interest rate debt, or number 2, build your emergency fund. This should be, in my opinion, one of your highest priorities because even though it's not sexy or fun, it is actually one of the best returns that you can get on your money. When it comes to high interest rate debt, debt is actually costing you money, and it can actually be one of the best ways to actually get a guaranteed return. Let me explain. Let's say you have credit card debt and the interest rate on your credit card balance is 16%. Well, if you pay off that credit card with a 16% interest rate, it's basically like saying you're guaranteeing a 16% rate of return. Because let's say instead of paying down debt, you invested your money instead into the broad market, which historically returns on average 8% a year. That's fine and all, but that's the thing. It historically returns on average 8% a year. That means some years you could actually make a lot less than 8%, and some years, yeah, you'll make a little bit more than 8%. But it doesn't mean that every year is going to be 8%. And what I'm trying to make a point here is that it's not guaranteed. It's not a guaranteed return versus if you pay off your credit card, you're basically guaranteeing your returns. So that's the thing. It's basically an opportunity cost of your money. Is your money better served paying off debt, which will give you a guaranteed rate of return, or is it better off investing in something that might not give you such a guaranteed return? Now you're probably wondering, Humphrey, what do you consider high interest rate debt? And my answer for you guys would be anything over 4% a year. In my opinion, any debt over 4% should be paid off immediately because that's typically what the return you can expect on average from the market is after taxes. The other thing that people don't really bring up when talking about paying off debt is that it actually frees your mind a lot. It's like a weight is lifted off of your shoulders and you'll be able to operate with such peace of mind that you might be able to even make a lot more money in the future. So that's one factor of building a financial foundation, and the other is to establish an emergency fund. When it comes to having an emergency fund, most people suggest having 3 to 6 months of living expenses saved up in a liquid account. Now, I personally have somewhat of a different setup because I'm slightly more risk averse, and if you watch my video on places where your money should go, you'll find out a little bit more about my personal approach. Anyway, the point of the emergency fund is that after you've established it, you now have a safety net to fall back on, and so now you can afford to take more risk in the future with your investments. The emergency fund should only be kept for emergencies and should be liquid, which means you should be able to access that money at any time. It's a fund where your balance should not fluctuate too much, so for that reason, I'm not suggesting that you actually invest that money, but I'm actually suggesting that you put it in a high yield savings account. After you've established an emergency fund and you've actually started to pay down high interest rate debt, I think that's when you can start to actually go into pillar 2, which is getting into some of your core investment holdings. When it comes to the best ways to invest $10,000 in core investments, we should probably break it down into the following 3 components. Number 1, we'll want to fund our retirement accounts. Number 2, we'll want to invest in long-term safe holdings such as index funds and ETFs. And number 3, we'll want to invest in anything that provides us a decent return for a relatively safe risk level. So let's talk about number 1. With our $10,000, if we haven't started an IRA or a Roth IRA or a 401k retirement account yet, that's where I would start in the first place. For those of you that don't know, a Roth IRA is a special type of individual retirement account that allows you to grow your earnings tax-free. So essentially you can start one of these accounts as long as you have earned income, and the main draw of the Roth IRA is that you actually contribute to it with after-tax dollars. But as a result of contributing to your Roth IRA with after-tax dollars, now all of a sudden all the earnings that you accumulate in your Roth IRA are actually tax-free. Now it is a retirement account, so that means your withdrawals will probably come after the age of 59 and a half, but it is such a great core investment holding that I would recommend it to almost anybody. The power of earning tax-free money is so good. Let me show you guys an example. If you were to contribute $5,000 a year, for example, to your Roth IRA, and you're starting at the age of 25, by the time you're 65 and you retire, if you just invested in the broad market overall, which averages around 7 to 8% a year annually, you're going to be a millionaire. Now, in the case of the 401k, one of the main benefits of having a 401k is depending on your employer, you could get a match on your contribution, which is like free money. Now, I don't want to get into all the details of retirement accounts right now, but you'll want some of your investment into retirement accounts just to set you up for the future. And within those retirement accounts, you can invest in long-term safe holdings such as index funds or ETFs that track the market. An index fund is basically a fund that you can buy on the market that contains a portfolio of stocks. So for example, if you buy the S&P 500 index fund, which is one of the most popular index funds out there, by buying that one fund, you get a small percentage of everything that that fund owns. So by buying that one fund, let's say it's the S&P 500 market index fund, for example, you're immediately invested into the entire S&P 500, which means that your investment is instantly diversified. Now, I have a video on a simple investing portfolio that I made, and that is probably what I would suggest for most of you guys watching out there. It's a complete portfolio consisting of just 3 index funds, which will allow you to take advantage of the growth and diversification that these index funds offer. Index funds also require basically no management. Since they're tracking the index, they're basically passive investments. You can just kind of set your money in there and kind of forget about it. They also have super low fees, which means that your investment isn't just losing a bunch of money to fees. They're a great core investment to hold, and they'll act as a natural counterweight to any of the more riskier and speculative stocks that you might want to buy. The last core investment I want to talk about here is anything with a relatively safe risk level, but also offers a decent return. Now that's totally up to your interpretation, but anytime you see something that isn't super risky in your opinion and offers a decent return, that can also go into part of your core investments. An example of my own is that I have a large dividend stock portfolio, and I view this as relatively safe but pretty good return. I have enough of these stocks in my portfolio that I'm well diversified, and by definition, a dividend paying stock is usually more of a stable company, so it's less risky overall. Notice how I didn't say $10,000 worth of Tesla stock for my last core investment. Now, while Tesla is a solid company, its volatility is off the charts, and if you had put $10,000 of your money into Tesla, well, I would actually consider that quite speculative. So here guys, just make sure you use common sense when you're actually investing in things that are gonna be considered part of your core, because you want something that has a decent return for a relatively safe risk level. Now, if you do wanna be spicier, the next pillar we're gonna be talking about is speculative and riskier investments. These are investments like individual stock concentrations, cryptocurrencies, maybe Forex trading, basically anything where your volatility is going to be high and you actually might lose money. With individual stock picks, you can invest in these as long as you think that the company has a long-term growth outlook or a short-term growth outlook depending on your time horizon. For example, I own a lot of Apple stock personally, and it's because I think that they're going to continue to grow, and also they're sitting on a big cash reserve pile as well as frequent product releases. I mean, can anybody say AirPod Max? But even though I hold a large concentration in Apple stock, I'm still balancing it out with my core investments like my index funds and my dividend portfolio. It's okay to make riskier plays in your portfolio, especially if you have your financial foundation and your core investments already handled. Just go into these plays knowing that you might lose all your money, and that could be a real possibility. Some other riskier plays we haven't talked about is perhaps putting some of your portfolio into Bitcoin or Ethereum, or even investing in collectible cards like the Pokemon card craze that's going on all over the internet right now. now. One asset class that I didn't really touch upon is real estate, and that could either be a core investment if you're really knowledgeable in real estate, or it could be more of a speculative play if you don't know what you're doing. There's also not a lot of things that you can buy with $10,000 in real estate. Now, you would have to get an FHA loan, which is a federally approved loan for your first home typically, which allows you to get a down payment of maybe 3 or 4% instead of your typical 20%. And that'll allow you the leverage to actually buy a bigger rental property. But in terms of rental real estate or real estate in general, I think that if you do have a lot of knowledge in it, it can actually be a core investment. But otherwise, I would actually consider it more of a riskier play, especially if you're new to the game. The main takeaway that I want you guys to have from this video is that you want to balance out your speculative, riskier plays with some core investments. So with that being said, those are 3 ways to invest $10,000. Drop me a comment with any of these strategies that you already employ. Make sure to like this video, drop it a subscribe if you got any value out of it, and make sure to tick the notification bell so that you can get notified whenever I post a video. If you'd like a free stock when you deposit any amount of money in Robinhood, even if it's just $1, use the link in my description below for that. Lastly, thank you to all my Patreon supporters. I appreciate you guys being here. I will see you guys in the next video, which will hopefully be in a couple days here. All right, peace.